All right, guys. Happy Monday, everybody. James Blacklaw's JB Commercial Finance here. It's 9 o'clock, just gone 9 o'clock actually. I'm not deliberate doing it at 9. Just seems to work that way. I want to do a quick video today about Metro Bank. A lot of you may be wondering what's going on with regard to the headlines that you've heard over the weekend, or you might not. So this might be new information. But Metro Bank, who launched 10 years ago, I think it was 10, 12 years ago, whatever it was, just after the financial crisis in the late 20s, what do you call them, the noughties, and they were sort of a new concept, well, not a new concept, but almost like a new old concept. It was supposed to be local banking, your high street branches opening at a time when other branches were shutting, common sense banking. And yeah, absolutely, they got some really good reviews for their staff. They're not, certainly where I am in Leicester, done a lot of sort of networking locally, put on events for the local sort of professional community plus customers. And in my space, while they're very difficult to deal with because they don't have the resource necessarily, their products have been quite powerful, quite strong. But it all seems to have come crumbling down in the last week or so. And without going into a huge amount of detail on our Facebook Live post, effectively they've run out of money, run out of liquidity. They need we're talking about over £1 billion just to continue to survive, and it needs to be done incredibly quickly. Doesn't look like they're going to go pop, because it looks as though the regulators and the government are shopping them around, hawking them around to try and find a buyer. And at this moment in time, it seems like they are focusing on the high street banks, NatWest, Santander and Lloyds, who have all been approached about mounting a takeover. Santander appear to be the strongest contenders, but there may well be a deal to be done because they do have a decent amount of deposits. They have got quite a large book of customers, but the problem is they've also got large liabilities, especially with regard to their branches, because the downside of taking on branches in the city centres is they have long leases, they're expensive refurbs, and expensive rents, along with the obligations to the staff, etc. So there's a hell of a lot of liability to take on if you're going to take on the branch network of someone like Metro Bank, especially if the business that's being conducted in the branches isn't paying its way, which seems to be the case. So the situation is that at this moment in time, as we sit on the 9th of October, the Metro Bank are screwed, basically, unless they can raise this finance. I think there will be someone, my hunch is that they will take on this liability and will take on Metro Bank, but in all honesty, I can see those branches being shut as leases run out, or there's some natural culling, or there may even be, and God, we don't want this to happen, there may be some kind of government-backed scheme to help a potential buyer to the liability that's dumped on the government to protect the clients. So who knows? It feels we're going back to 2008 again, doesn't it? Now, is this the sign of something to come, possibly, or is it just the fact that someone who tried to get into the marketplace, they've maybe been slightly bullish, slightly overconfident, and the crisis of COVID plus the interest rate hike and the cost of living crisis has caused them to go pop? I don't know. It'll all come out in the wash. But that brings us up to where we are at this moment in time. Hopefully that's a little bit useful for some people. There's obviously an awful lot more to this story, and all you have to do is Google Metro Bank, and there's a million articles on it. So feel free to do that. Any likes, comments, always welcome, and I hope to speak to you all soon. Have a great day and a great week, everyone.